Hey guys, how's it going? Alex here with Big Money Theory. If you're new to the channel, welcome. If not, welcome back. Today I would like to talk to you about what's going on the market. As the first part of this video, we're going to have a quick overview of how the stocks perform throughout the day and in the post-market. And the second part of the video, I'm going to explain why that happened, what's going on, and what you should do next. A couple things I would like to mention before we actually dive into the video. First thing, despite the market going completely bananas, and the stocks crashing down 5, 10, 15%. I actually made a trade today where I gained 25%. If you want to know how I did that, and maybe you want to participate in that as well, take a look down below in the description where you will find the link to my Patreon, where you can sign for the Patreon. You'll have access to the Discord where I discuss daily what I buy and sell with my subscribers. Another thing, if you like what you heard, leave a like, drop a comment, consider subscribing to the channel. That will help me to grow the channel. I would really truly appreciate that. And now let's dive into today's video. So I have a couple of portfolios which I use to track how the stocks will perform. First portfolio I have is called solid buy. So those are kind of stocks that can be bought anytime, and I truly believe in the stocks. And when I see red days, that means those stocks are tempting for me to buy because they are going for the dip. But those are the normal days, not the days we had for the past couple weeks. So if we look at some of the biggest moves, we see Tesla dropping down 8% throughout the day and another 2% in post-market. T2 Bias Systems 6% and another 0.1% in aftermarket. Senseonics Holdings 11%, 9% in aftermarket. And the list just goes on and on and on. And we're not even talking about just about small companies. Let's say T2 Bias Systems, TTOO. The market cap, if you see, it's only $350 million. So you can see, 6% down, that's normal, that's just volatility. But we're talking about Tesla. Tesla is 650 billion market cap. We lost 10% within a day. Senseonics lost 20% within a day. It's $1.5 billion company. And then we can go ahead, Apple, 4%. eXp World Holdings, $8 billion company, lost 11%. Jumia lost 11%, Bionano Genomics 10%, Plug Power 13%. Some of the huge companies, Etsy down 5%, DocuSign 6%. ARK Invest ETFs, everybody loves ARK Invest. How's the ARK Invest performing? Well, look at that, 6%, minus 6% throughout the day, minus 6, minus 6.5, minus 4, minus 4.5. But then look at the post market, another 3% down, 3%, 3%, 3%, 3.5%. ARK Invest just taking a beating at this point. Teladoc Health minus 13% and another percent in aftermarket. Those numbers are just nuts. But then if we look at another portfolio that's called stock research, that's kind of high risk, high reward portfolio. Look at this, American Resources 20%, another 4% in aftermarket. American Battery Metals 9%. They don't have aftermarket, but I expect a huge drop in the beginning of the day tomorrow. Nano Dimension. Everybody loves Nano Dimension. It's hype stock, high growth stock. Look at that. 14% throughout the day, 6% in aftermarket. That's just stupid. So I can say that a lot of companies took a huge beating within the past couple of weeks. If I'm not mistaken, this correction started not the last week, but the week before on Wednesday. That's when things started going down. And I don't think anybody expected to see what we're seeing right now. I do really like ARK Invest, and one of my favorite ones is ARK Fintech Innovation Etf, ticker ARKF. ARK Invest ETFs normally kind of follow the S&P 500, but if S&P 500 goes up, ARK Invest goes up higher. If S&P 500 goes down, ARK Invest kind of goes down lower. So they almost have like a small multiplier there. So if we look at the 1 year chart, we can see these guys had corrections. They had correction in September, 11% down. They had big correction in November. It was 8% down. Now, the biggest correction, of course, they had was in March when, everybody knows what happened there. These guys went down at one point of time 30%. So that's so far the hugest correction they had. What about now? So just to give you an idea, guys, since the correction started, ARK ETF went down already 13.5%. So we are going through the correction, at least ARK Fintech goes through the correction, the second biggest for this year. This is the biggest correction they had since the March, and we know what happened in March. But moreover, now it shows minus 13.5%. But if you look in the aftermarket, where is it? Arc Fintech Innovation. In aftermarket, they lost another 3.57%. So that means they lost what? 14, 15, 16, 17. They lost 17%. That's half of what they lost in March. And those are huge numbers. So now let's get into the second part of this video. And I want to talk to you about what is going on and where I see this going and what you should do. So there are a few things what's happening right now. We are going through the correction, and based on my kind of estimate, we should have stopped the correction kind of yesterday. And today should have been almost like a greenish day. And we actually see that on some of the stocks. The day didn't start too bad. It was half victory, half loss. So it wasn't terrible. It almost looked like for some companies that we reached the bottom of the correction. But something happened that changed everything. So I would like to talk to you about bonds. Bonds are responsible for what is going on the market, at least for today. So what are bonds? Imagine that the government is going to be selling a booklet with coupons, and that booklet will cost about, let's say, $100. The government is going to sell that booklet to you with, let's say, 10 coupons. That would be equivalent of a 10-year bond. So imagine you have that booklet and it has 10 coupons. So every year you can kind of tear off that coupon and go to the government and be, okay guys, here's my coupon. And the government gonna give you $10 back. So that's, let's say, 10% return. So every year for the 10 years, you can go back to the government once a year and give them the coupon, and they're gonna give you $2 back. So the bonds pretty much considered risk-free investments because they are backed by government. In this particular case, we're going to be talking about United States government, so the backed by United States government. You can have bonds for Canada, Russia, Ukraine, Germany, France, Japan, whatnot. Every country has bonds. All the numbers I'm going to be talking to you about right now are the numbers given to you as an example. So now let's go back to the bonds. They have 10-year bonds, they have 5-year bonds, 2-year, 30 years. There were ones talking about 100-year bonds. I don't think that exists now, but still. So what's going on is that's risk-free, but very low kind of gain and very safe play. Because with the stock market, you can invest money in the stock market. It can crash. It's going on right now. So let's say you bought Bionano Genomics and, 2 weeks later, this company lost 60%. So you lost 60% of your money, right? It might take quite a while before the stock price goes up again. With the bonds, you are guaranteed to get those 2% every year. Once again, the percentage is actually different, but we're talking about, for the simplicity, about 2%. So the big thing is happening right now is people stopped buying bonds. And that is very important because government, partially at least, relies on selling those bonds and getting the funds, and using those funds, they pay salaries to the government employees, they build roads, they build schools, and doing other projects. And in particular, what they're going to be doing with those bonds, with the money they get from those bonds, is financing the 1.9 trillion stimulus that's coming up for the United States. So to fund that 1.9 trillion coming for the United States as a stimulus, the government has to sell bonds. And that makes a unique situation because a lot of investors who normally buy bonds, they actually decided to put purchase of the bonds on hold. And here's the psychology behind that. The United States needs to get that $1.9 trillion from somewhere. So they're going to get those bonds. And those bonds are going to flood the market. And what's happening when you have too much of something? The price goes down. So now let's say that instead of $100, will cost $50 just for the simplicity of it. But you're still going to get your $2 back every year. So now instead of 2% return, you're going to have 4% return. And once again, the numbers are just for example, the actual numbers is different. So a lot of people think that this is exactly what's going to happen because there are going to be so many bonds that the government will have to offer better rates for those bonds to actually make people buy them. Second thing that is important is a lot of people are afraid of inflation. So let's say you have a normal inflation of, let's say 1%, and your bond gives you 2% year return. So that means it's much better to buy bonds because it's very safe investment. And in the end of the year, you're going to get 1% instead of getting nothing or actually losing your money if you just have your money in checking account, right? Now, because people are afraid of much higher inflation, and it is really possible that they're going to have higher inflation because a lot of people gained a lot of money from those stimulus checks, but instead of spending that money, they put it in the saving accounts because they don't know what's the future going to bring. So we have a lot of money printing, but we actually have very small amount of money in the economy right now because people don't spend as much as they used to spend. So second thing they're afraid of is inflation. Imagine your inflation instead of 1% is 2%. Your bond is 2%, so you're not making any dollars. What's the point? What if inflation goes to 3% per year and your bond only gives you 2% return? Now you're actually losing money. Nobody wants to lose money. What's the point of buying those bonds then? You might as well invest in the stock market. So this is the second reason why the bonds are not selling right now. The third reason is that a lot of investors are actually afraid that Fed is going to change their mind and they're going to increase the rates sooner. And instead of getting 2% return on those bonds, you might get 3% return on those bonds if the Fed changed their mind. So a lot of people are actually on the edge of either buying the bonds or not buying based on that fear that they're going to miss out on better return. So because of all those things I just mentioned, people are not buying the bonds. There is one thing I would like to mention is normally the tipping point for those bonds, for at least for 10-year bonds, is 1.5%. So normally a lot of investors consider rates below 1.5% not very attractive and they would rather invest in the stock market. But if it goes above 1.5%, a lot of times investors actually start pulling money from the stock market and they start putting the money in the bonds because now bonds looks much more attractive. So that brings us to the huge thing that happened today. At one point of time, those bonds reached 1.54% and they leveled off at 1.51% returns on 10-year bonds. Just to give you an idea, last Friday, those bonds were at 1.37% return. So they gained 14 basis points or 0.14 points within just a few days. That's the highest spike for the bonds we've seen in many, many years happen just within one day. And that spooked a lot of investors. A lot of investors actually thought that today would be like, the bottom of the market and we're going to see, slow recovery from that correction. But this bond situation just plummeted the stock market because a lot of people started, selling their stocks and buying bonds. So the capital transferred from one area to another area. And that hit the market a lot and also made a lot of fear that people are going to miss out on the bonds. And even maybe some people still didn't buy them, but they pulled out the money from the stocks. So that's crashed the stocks. Before we get to the second thing, why the stock market is crashing today, I will ask you to leave a like, drop a comment, consider subscribing to the channel. That will help me a lot and will help me share the knowledge with more people. So the second thing why the stock market is crashing is short squeeze. We are seeing the short squeeze again. Look at this. GameStop gained since Wednesday until today at 1.300%. Just so you know, right now the market cap of the GameStop is $7.6 billion. And that is after the GameStop already lost 40% within trading day. That means at one point of time, the market cap was more than $10 billion. So to get to that point, plus 300% throughout the day, people had to find $6-7 billion to invest into the stock to push it so high. Majority of the investors for the GameStop, and when we talk about GameStop, look at the AMC Entertainment. Since Friday, these guys went up 100%. Now they lost again 24%, but still. So now back to the GameStop. So for people to be able to buy GameStop stocks and shoot it up 300%, they had to sell something. GameStop is a YOLO game for retail investors, for people like me and you. So to get money to buy GameStop stock, AMC's, BlackBerry, whatever you feel like pumping today, you actually have to sell something, because a lot of people don't really have too much cash on hands right now. A lot of retail investors actually invested in the stocks. They don't have too much free cash. So you have to sell something. What are you going to be selling? You're going to be selling stocks that are dropping down for the past week and a half. And because a lot of those small high growth stocks were constantly losing money for the past few days, a lot of people decided to sell those stocks they're losing money on and try their luck with GameStop. So because GameStop gained, $7-8 billion within just 2 trading days, those $7-8 billion had to be pulled out from something. And a lot of those high growth stocks were hit. And this is just one company. And then we have, AMC with a couple $1 billion there. And we have also other companies that are short squeezed. So here's the other reason why we see a lot of high growth stocks actually selling off rapidly. And now let's jump into the third reason why we see what we see on the market today. And the third reason is weak hand traders. I'll explain myself. A lot of traders that are on the market right now, a lot of at least retail traders, joined the market since March. And as we know, since March, the market was pretty much going straight up. And a lot of those retail investors, they've never seen a big correction. They've never seen losses of 10, 15, or 20% in the stock market. They've never went through the big recession. And they don't know what to expect. And when they see a lot of stocks are losing money, and not just for 1 day or 2 days, but it's been almost 2 weeks now, what they do, they sell off. Because they don't know what to expect, they are afraid, and they just dump all the stocks they have. And as soon as you sell the stock with a loss, that keeps pushing the stock down even further. So this is the third reason why this is happening, what's happening right now in the market. So let's just recap what I just said. First reason why the market is crashing is bonds, the whole situation of the bonds. Second reason is the short squeeze. Money needs to be pulled out from somewhere to be put somewhere, right? People selling the stocks to buy GameStop. The third reason is weak hands. People don't know what to expect and they panic and they just sell everything they have. Now let's talk about what you should do, at least in my opinion. What is going on at the market right now is actually creating a great entry point into the stocks. So if you have some cash on hand and you were waiting for a nice dip into the stock so you could buy in and some of the stocks you really like, great time. We still can see a few days of correction, but I think we are close to the bottom of this current correction. If you want to be a little more safe, what I would do is I would wait for 2 green days in a row. So if let's say we see a green day on Friday, tomorrow, and then we're going to see a green day on Monday, then that would probably mean that we passed the bottom of the correction and now we're on the recovery. Just one green day is not enough. This is exactly what happened last week. We had one green day and a lot of people started buying because they thought that there was a just small correction and we hit the green day and now everything's going to go back again to uptrend. No, it continued dropping down the next day and dropped down lower and lower and lower. So at least wait for a couple of green days. If you're not sure what's going on, you want to be more safe. Maybe 3 green days in a row. One thing you should not do if you are a long-term investor, do not sell anything. Even when we have a huge corrections or bear market or even collapse of the market, stocks will go up eventually. So unless you need to have cash on hand right away, you need to buy something or you have a payment coming up, try not selling anything. Don't panic. The stock market is going to go up again. And this is it for me, guys. Thank you so much for watching. If you want to know how I gained 25% within just one trade today, consider subscribing to the Patreon. You're going to have access to the Discord where I actually wrote down the entire plan for tomorrow for that trade. If you like what I heard, leave a like, drop a comment, consider subscribing to the channel. I would really, really appreciate that. Once again, thank you so much for your time and have a great day.